back and you're watching Market Fatafat on ET now. Let's keep it going with all the stocks that have been in focus and buzzing in trade today. And yes, the latest earnings was Hindalco, which we did say, and now Inox India, that came out with its numbers as well. So surely on the back of that, we're seeing some bit of a reaction coming in on Inox India as well. Revenues up 19%, margins have seen an expansion of around 150 basis point as well. Stock has seen a spike up almost 2% as of now. But on the technicals, now we're joined by Aditya Agarwala joining in with us. Aditya, very good afternoon and thank you so much as always for joining in with us. Let's talk about your first stock, Alchem Labs. What's the chart indicating for this one? Where do you see it headed? A bullish call?
Good afternoon, Vinny. Thanks for having the show. Oh, yes, it's a bullish call and it's a good looking chart structure as well. If we take a look at the performance of the stock for the past one and a half week, it's making higher highs, higher lows, and now it's resumed its uptrend after taking support at a trendline support as well. So I believe a sustained trade above 5300, 5350 will take the stock higher to levels of 5700. That's my first target. And beyond that, it can test levels of 5900 as well. On the downside, again, immediate supports are at the trend line, which is at 50. I would like to believe so, Vinny. And if you take a look at the chart structure, yes, you are right. Stock hasn't done much for itself. In fact, the entire basket of paint stocks, be it Berger Paint, Asian Paints, they haven't done anything for the investors or traders. But I believe it's time the stock should see some kind of a pullback from current levels. Importantly, because it has taken support at its previous cluster of lows, and from there, stock is showing some kind of a pullback. At current levels, the risk to reward is also in favor of going long. And I could see easily stock testing levels of 3,100 to about 3,200 as well on the upside. On the downside, immediate supports are closer to about 2,900, which is not very far off from current levels. So the risk to reward clearly is in favor of going long in Asian Paints. The risk to reward is there. Plus, the RSI is also moved higher from oversold zone and it's entering into the bull territory gradually. So I believe overall it looks like a short covering rally in Asian Paints is coming. You would not want to miss out on that opportunity.
Okay, let's move on to the next stock then. And Ankita, Coal India 2 reported its numbers. How are they looking like?
Well, a very strong set of results coming in from Coal India. In fact, you can see that in the share price, it is up 5% in trade today. Look at the numbers, strong set for quarter 3 with the highest ever quarterly PAT that the company reported. The revenue was in line. EBITDA and PAT beat the street estimates, and the margins came in, at 31.5% versus 18 hours poll of 27.6%. So a beat coming in on the margins front as well. Let's look at the offtake. The offtake was up 10% on a sequential basis, which of course aided the revenue growth on a sequential basis. The e-auction volumes remained flat. However, the e-auction realizations were up 17% on a sequential basis. The FSA volumes were also up 11%, but the realizations were flat on a quarter-on-quarter basis. Also, the company declared a second interim dividend of 5.25 rupees per share. And on the back of this strong set of results coming in for Coal India, the stock is up 5% in trade.
All right, before we move ahead, let's take a look at Siemens numbers for the quarter gone by. Q1 is what they've reported. The consolidated PAT has seen an uptick about 5.9% on a year-on-year basis. It's coming at around 463 crore rupees. If you look at the EBITDA margin, however, it has dipped actually on a year-on-year basis. The EBITDA margin is coming at around 11.8 versus 15.1% on a year-on-year basis. The revenue has seen an uptick of about 21.7%, while the EBITDA has actually seen a down to about 4.8% on a year-on-year basis. They've said that the new orders they've received worth about 5,971 crore rupees, which is an increase of about 10% on a year-on-year basis. They're saying the PAT includes a significant gain of about 103 crore rupees due to positive effects of foreign exchange and commodities. They're also saying the decline in new orders in their digital industries automation business on account of destocking following the normalization in their demand. But they're also saying the private capex is beginning to pick up and they're expecting orders in digital industries automation business to normalize from Q3 onwards. And if you look at the stock price, there you go. After actually touch a name, they have actually said they will have a change in the CFO as well of the company. That's Siemens for you. Reacting to his numbers, the EBITDA margin has seen a downtick on a year-on-year basis, Vinny.
Absolutely, that's Siemens for you all. Surely going to be keeping an eye out on that one as well. But, Cheryl, Amber Enterprises, that's seen a bit of a slump coming in trade today as well. And numbers was not anything exciting, but I believe downgrades coming in.
Absolutely, Vinny. A couple of downgrades actually have come in for Amber Enterprises, and that's one of the reasons why the stock is actually reeling under pressure. They've extended the previous day's slide, and remember that at least 5 brokerages have gone ahead and downgraded the counter. You have the likes of CLSA as well as Yes Securities that have downgraded the stock. Yes Securities, while downgraded the stock, they've said that the Q3 results were disappointment with revenue and margins coming in below their estimates. They're saying revenue miss was due to some of Amber's customers moving their room AC production in-house. Also, the company expects slackness in the RAC revenue to continue for a couple of more quarters as two of its customers are shifting their production in-house. And what Yes Securities is saying, the Amber has already visualized this and is transforming itself as a component supplier, which will enable it to protect its wallet share as well. But if you look at the stock, definitely not looking too happy. 7% downtake, 5 brokerage downgrade.
Let's move on and talk about HDFC Life then. Aditya, this one, has been a very subdued move in the last 6 months specifically and remained in that range of around 600 to 700. Nothing exciting that's happened there. So for HDFC Life, what's the view now?
So I think we need most of this space, the HDFC Life or SBI Life, they have been subdued. But I believe it's time for life insurance companies and general insurance companies to start and outperform, maybe heading into elections and full-fledged budget as well. Chart structure looks like stock is headed higher from current levels. It's taken support at key Fibonacci retracement levels and moving averages. Now, if it manages to sustain beyond 595, I believe stock can easily test levels of 625 to about 650 as well. RSI started making higher highs, higher lows, which we did not see earlier. So overall, looks like a short covering rally and a minor pullback is on cards as far as HDFC Life is concerned. Again, the risk reward is in favor of going long. So hence, I would strongly recommend to look at this space and HDFC Life in particular.
All right. On that note, we'll slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere.
Welcome back, and you're watching Market Fatafat on ET Now. Let's keep it going with all the stocks that have been buzzing in trade. And the next one too is a chemical company that's in focus. Not a great set of numbers that was reported by them, and that's Chemplast Sanmar. When you look at it, yes, the stock saw a spike up, then has given up those morning gains as well, widened as well. The net losses have come in at around 89 crores versus a profit last year. So they've swinged into a loss versus a profit last year of 27 crores. EBITDA performance also has been weak. They've reported an EBITDA loss of 7 crores versus an EBITDA profit of 78 crores. So clearly pressure that has come in on the stock as well after a weak set of numbers was reported by this chemical company as well. We're keeping an eye out on this one.
All right, let's talk about MCX because it's been news since the word go today, given the fact that they started the trading. The trading actually resumed on the platform after a 4-hour delay. What the company said that the delayed start, they've attributed it to slow processing and generation of back-end files for the members. However, sources have told ET Now, based on this particular development, that SEBI is likely to ask for root cause analysis report from MCX on back of the fact that they had a huge delay in starting the trading. The regulator will mull a penalty or action on MCX after the assessment of the technical glitch. They're saying what the sources are also telling ET Now is that the SEBI guidelines also prescribe for financial disincentives on handling of technical glitches. And SEBI's Technical Advisory Committee will be reviewing the response that will be given by MCX. Apart from that, remember that MCX had received the SEBI approval in October 2023 to launch a new commodity derivatives platform. Remember, the vendor is a TCS for this. And this is the latest that we are picking up on that particular front. SEBI as well as MCX did not respond to ET Now's queries. But for now, what we're picking up from our sources is that SEBI will be asking for root cause analysis report from MCX.
To look at the stock with a good support at 2400, stock can easily test levels at 2700 in the near term.
Let's talk about HEG. Snehi, that one came out with their earnings. How are they?
Well, not very nice, Cheryl. A rather weak set of numbers coming in from HEG, and the stock price is also reflecting that, down in about 6.5% in trade today. That stock under pressure. Revenue has come in at 562 crore versus 530 crore, up 6% on a year-on-year basis. But this is the only metric that has actually seen any amount of increase. Because when we talk about EBITDA has come in at just 87 crore rupees versus 132 crore, down 35%. Net profit also just in at 44 crore rupees versus 105 crore. So that's a big fall coming in of roughly 58% on an annualized basis. EBITDA margins have also shrunk quite significantly at 15.4% versus 25% this time last year. So big contraction coming on that front as well. But what's also key to note is that the company's subsidiary called Chango Yangthang Hydropower, which is also a subsidiary of the company's another subsidiary, Bhilwara Energy, has surrendered a 180 megawatt project to the government of Himachal Pradesh due to delay and uncertainty of whether they will ever be able to complete the project in time. So the company has gone ahead and written off capital work in progress during the year 17-18 that was amounting to roughly 27 crores, and this news flow has not been taken very well with the street, and the stock is down 6% as we speak.
Let's move on, talk about Cipla then in the pharma space. And Aditya, Cipla, when you look at it from December onwards, we're seeing a bit of an uptick and the pace has picked up for Cipla. So now, what's your view on Cipla? Where do you see it headed? Still more upside?
Yes, Vinny, I believe there's still more upside, and it's probably one of the strongest pharma stocks. If I have to pick one in the pharma pack, stock continues to make higher highs, higher lows, goes strength to strength. Despite the fact that the markets have been volatile and all over the place, this is one stock which continues to make higher highs. At current levels, if one initiates a fresh buy, can look for a target of 1550 to about 1600 on the upside. On a high time frame charts, I still see much higher
today, and it is coming on the back of the fact that the company has emerged as the lowest bidder, L1, for Madhya Pradesh Paschim Kshetra Vidyut Vitran Company for the supply, installation, testing and commissioning of a new 11 kV line for bifurcation and interconnection. And this contract is going to be worth 106 crores. And on the back of that fact, or the back of the contract win, RVNL is up more than 6.5.
710 is a very strong support on levels, and on the upside, stock can easily test levels of 800 to about 820. Plus, RSI has made a shift from bear zone to about entering into bull zone now. So it shows that there is some kind of a buying that can emerge in the stock. So hence that bullish call on SBI cards.
All right, let's move on and let's talk about all cargo logistics, and that particular counter is actually reacting to its earnings. If you look at the stock, is trading lower by about 3.5%. It was much lower than that. 7-week low is what it hit on an intraday basis by falling about 8%. It actually reported a poor set of numbers in the quarter gone by. If you look at the Q3 profit, it actually nosedived about 92.4% on a year-on-year basis, while the revenue from operation fell by about 22.2%, coming in at around 3,212 crore rupees. On a consolidated, on a quarter-on-quarter basis as well, you had the PAT and the revenue actually see a downtick, and that's the reason why the stock is under pressure. 3.3% downtick as we speak.
Okay, surely keeping an eye on that one. But Aditya, Maruti, it's comfortably trading above that 10,800 mark. Now, what's the view on this one?
So when it's moving in a broadening wedge pattern, by broadening wedge pattern I mean the positions as you move on, the prices inch higher and higher and lower and lower. So at the moment it is inching towards the upper end of the pattern, which is closer to about 11,200. And the recent corrections, we didn't see any major correction in the stock despite the market correcting of late. So I believe stock has some strength still left, and upside also left in it. At current levels, it makes a very good buy with a strong support area close to about 10,700, 10,650. And on the upside, I see stock testing levels of 11,200, about 11,300 as well. Along with that, as I always look at RSI, it's sitting very strong above 60 levels. In fact, in the recent correction, it took support at the 60 level. So that shows the strength in the stock. And if I have to bet again on a auto stock after two-wheeler, it has to be Maruti within the four-wheeler space. So a very strong looking chart structure, and I would go for a buy for a target of 11,200 on the upside.
That's the view coming in on Maruti. On that note, we are totally out of time on this edition of Market Fatafat. Thank you so much, Aditya, Snehi, as well as Ankita and Osho for joining us on the show. It's a good buy for Vinny, myself, and the team that put the show together.